Welcome to the 2023 Economic Preparation and Development Channel. I'm your host, Tony. Thank you for joining me on this Sunday edition. Briefly, December 3rd, 2023. We're heading toward the end of the year. And with that, people are tying up financials, tying up holiday plans, and just getting things ready for next year, which looks to be a very volatile year in both the stock market and in the real world, as we have elections and other things coming up as well. So please be sure to hit that subscribe button if you haven't already. And we're going to get right into it today. Thank you for joining me here briefly on this Sunday. We're going to be talking about the Fed's favorite gauge of inflation, courtesy of CNBC.com. It rose 0.2% in October and 3.5% from a year ago. So inflation is still here, even though inflation is down somewhat. We know gas prices have come down somewhat, according to AAA.com. And people are feeling a little bit optimistic that the Fed will begin cutting rates as early as April next year, 2024. However, there is no indication from Fed Chair Jerome Powell that will happen. The Personal Consumer Consumption Expenditures Price Index, the PCI index, and now this excludes food and energy prices, it rose 0.2% for the month. So personal income and spending both rose for the month. So you can have, in a situation with inflation and hyperinflation, you can have wages going up, not real wages, but you can have nominal wages going up, as well as the spending going up. As people get spending for less, they spend more on groceries, but they're getting less of a product. You've seen those ads on the news and the media that they've been running, those pieces about how people have shrinkflation and the packages are smaller and less ingredients in some of these products that we buy at the grocery or the grocery store or the wholesale store. So that can be happening simultaneously. Continuing unemployment claims surged to 1.93 million. That's an increase of 86,000. This is the highest level since November 2021. We were still in the throngs of the pandemic during that 2021 period, as you know. And so the unemployment claims are rising. The continuing claims are rising. Initial claims may be falling, but the continuing claims are rising here, according to this article by CNBC. And we can see that many people have a lot of side hustles, whether it's DoorDash or Uber or Lyft or whatever side hustle that they're doing, freelancing, to help supplement their main income. And that's a result of this economy. The inflation is starting to get to a point where, even though it's coming down a little bit, it's not coming down fast enough for the feds or fast enough for the regular American citizens. So the stock market could be going up too. That's another thing too. The stock market is continuing to rise. It's up to 36,000 as of last week. But that's a sign of an inflationary economy too, where you have these stocks that are not based on fundamentals, not based on values and price to earnings ratio, but based on speculation. It's just a big game. So that can go up as well. Gold and silver, don't be surprised if that goes up. Don't be surprised if Bitcoin goes up. Any kind of asset is going to go up during hyperinflation. That's something that we have to really understand, because it's not based on the true value of the asset. So Chair Jerome Powell, according to CNBC Business, says too early to expect when to expect rate cuts. So he's still taking on a Paul Volcker style, tone here, where he's going to be raising the rates. The next meeting is on December 12th and 13th. That's coming up very soon here, ladies and gentlemen. That's coming up next Tuesday and Wednesday. I expect him to keep rates unchanged on that meeting, obviously, as we head toward the end of the year. But next year, I don't think the rate cuts are coming as fast. I see rate cuts coming in the last quarter, as we get past the election season, and whoever comes in, after that, then he'll start thinking about cutting those rates. But I don't see it happening in 2024, not with these things going on right now. The mortgage rates are still high, as you know, it's above 7%. We've got consumer spending, which drives about 2/3 of this economy. That's rising, but it's down from September. And also the holiday spending, they're claiming, has been robust. I don't know how Black Friday and Cyber Monday sales were, but most of it was online. Apparently a lot of the retail stores are empty at some of these outlets and malls. But however, people did shop and buy some things online, as I saw a lot of packages and doors on people's doorposts, not just from Amazon, but from UPS and FedEx and other carriers as well. So that's good news. The 30-year fixed mortgage, like I said, is still above 7.7% to 7.22%, but that's if you have perfect credit. Most of us are getting 8% or whatever the case may be. But we're going to be looking forward to seeing more and more geopolitical instability, and as a result of this geopolitical instability, not just in the Middle East or in or in Ukraine, but also in Africa, also in Asia, and some of these developing BRIC nations. The BRIC nations, Brazil, Russia, India, and China, more instability is going to be happening there as they try to meld together a sort of euro currency of their own to try to compete with the U.S. dollar. So that's a long way off, but we can expect more conflicts in the Congo, as you've heard about that in India, all over, just places all over that than the typical places, and that's going to risk taking this economy, China and Taiwan, once again, that's going to risk taking this economy into a recessionary period sometime in 2024, even 2025 as well. So that's what we're really going to be having to deal with as we try to navigate this political landscape and this economic landscape. But once again, this collapse, this total collapse, it's going to be more than just a economic collapse. Social collapse is going to be a spiritual collapse, a physical collapse of infrastructure in the United States. And so even though they passed the infrastructure bill, remember that's future plans that's based on capital expenditures, bonds, and the ability to sell bonds of these local governments and state governments. And if that collapses, that means that the infrastructure is not going to be repaired in these cities and states and counties and townships and municipalities. And that's going to lead to social unrest, which is going to lead to some form of a martial law, kind of like what they did during the pandemic, where they decided that everybody stay indoors, don't go out, don't drive, blah blah blah. So that's going to be coming back as well if this thing should go downhill and the Fed decides that they want to continue to raise rates and this thing goes downhill and we lose more jobs on the back end later on in 2024. So I just want to give you a brief update. Have a safe weekend. Enjoy yourself this weekend. And I'll talk to you very soon. God bless. See you later.